Hello everyone, welcome to the Ichimoku daily analysis for the US dollar Japanese yen FX for Monday, September the 28th. Well, quite a change of character for the market today. The previous day was a very large red-bodied candle, which means that the bears certainly were in the ascendancy yesterday. The bears had control of this market, they were keen, and they were committed to taking this market lower. We can see from the Kijun-sen and the Tenkan-sen that they're pointing down at a very sharp angle, which reflects the very strong downside momentum in this move in the market. Today, however, we have a very indecisive type candle. We have a candle which is a doji, and a candle with a very, very long shadow on the bottom, which reflects buying coming into this market. The doji means that the market opened at a certain point and closed basically at that point, which means that neither side has made any net progress on the day. So there's basically no body to this candle. While this candle isn't terribly bullish at the moment, it certainly is not bearish, and it's telling us that the bears have lost all of the power that they had on the previous day. The bears tried to take the market lower, but the bulls came in and brought the market back very solidly. This pattern is a potential reversal pattern, being a star pattern, and that's when the body of the current candle gaps to the downside, and there's a gap between the body of the current candle and a gap between the body of the previous candle. So there is very strong potential for a reversal of the trend in the first time frame to the upside. So we need to keep a close eye on the high of the current candle. This is a very, very strong warning signal that there will be a change of trend in this market. Just panning out a bit, we can see here that there was very strong buying coming in previously down below this 89.68 level. We can see the shadows on all of these candles here where there was buying coming in around these levels, and once again we can see the buying coming in. So one would expect that the buyers will come into this market and the market will begin trending up. Around the 90 level here, we should expect to see potential resistance for this market. We have previous support where we can see that there was buying coming in from the shadows on these three candles. So that's an area of potential support. If the market does trade up above there, then the Tenkan-sen is an area around 90.42 or 90.37.5, where the market will potentially find resistance up at that level. We know that when the market's been trending very strongly, that the first area that the market will tend to hold as support or resistance is the Tenkan-sen, and that certainly could be the case here. So we need to look at the short-term dynamics if the market does trade up to there. If the market trades up above there, then we need to look to the Kijun-sen as a potential area of resistance at 91.64, and that's just at the bottom of that area of previous support and resistance that we highlighted by the yellow markings here, and there's potential very strong resistance up there if the market does trade up to that level. Now we are trading a long way down below the Kumo, or the cloud, and the market is very strongly in disequilibrium, and we can see that we're trading a very long way below the Kijun-sen and the Tenkan-sen as well. So everything is telling us that the market is very bearish, but the market seems to be getting to the extremes of bearishness at the moment. So there is very strong potential for a retracement of this second time frame downtrend that the market's been in for quite some time.